afternoon this Tuesday, September 19th. A little bit of turnaround Tuesday today. Corn, kind of like that beach ball you try to hold underwater, and as soon as you let go, it pops back up. It had to be forced below that 470 mark, as really the farmers have with insurance. With the 85% coverage, you got a $5 put. Anything under $5, you just as well root for it to keep going lower into October, so you can pick up a bigger revenue check. And then after October's over, they'll let the price seasonally rise like it typically does. November could be tough, who knows? But December, January, February, we typically get a rise that you can take advantage of. So we'll see the corn selling is going to be minimal. Only prior sales will be delivered. Farmers are going to lock that up. It's the beans that are struggling because you're not going to have an insurance situation like that. They're too close to the highs of the year and to the price that was set back in February. And with that, farmers are probably pre-selling beans until they can be proven otherwise that these yields are not what the USDA massaged with its carryout magically coming in at the top of the pipeline supplies at 220 million. Just a drop of 500,000 bushels puts that carryout down to 180, and you're explosive. So it's interesting what the USDA has done, and it's interesting how the trade seems to just roll with it and believe it. But I guess shouldn't be surprised they do this every year, especially at this time of year ahead of harvest. Let's crash the prices. But things are starting to show a little float. A crash that occurred on the wheat after a nice recovery rally late last week. We had seen a 25-cent drop from last week's highs on Friday into overnight lows. Well, that was tied to a story, of course, over the weekend. A couple small ships made it into Ukraine. Well, as of late yesterday, that later dump in the wheat and last night's weakness came from the report that this ship had left a Ukrainian port and it has wheat headed to Africa. Well, that's not the whole story. What you should know is that ship that left, well, we should just call it a dinghy. Take a look at this. Here is a news story. The ship departs Ukrainian port with wheat, further testing Black Sea blockade. Well, read the stats. The vessel has 3,000 tons of wheat. What is 3,000 tons of wheat? Well, you just take 3,000 times a metric ton, 2,225 pounds, times the, divided, I should say, by 60-pound wheat. You come up with 115,250 bushels of wheat. Well, a unit train hauls up to 400,000 bushels of wheat. So it would take 4 of these little ships to fill up a unit train. So you get that this was a test, a story. Now it's a test to see if Russia will do anything with this little ship, because if they blew this out of the water or did something to it, it's really not much of a loss. As far as Russia's concerned, they're probably going to do nothing. And they figured, fine, go ahead, try to move wheat with these little ships. We don't care. You bring a bigger one in, that's probably where we're going to do a blockade or stop something bigger. So this kind of had the wheat under defensive today. But also, Kiev is trying to work out a compromise after last week. 3 UE countries, as we reported to you, the Slovakian country, the Hungary, and Poland, they don't want to let Ukraine come through here after September 15th with their grain. But they're going to try, they say, to work out some kind of licensing agreement. So we'll see how this flies. But this is also probably part of that weakness, is that maybe they can pull this off. But the countries of Ukraine, of the Slovakian country, as well as Hungary and Poland, they are really upset. They don't want their prices depressed anymore. Now, I wanted to show you today the wheat. I've been talking about for a long time how wheat prices have a strong tendency of bottoming by at least the last week of October and then moving higher to the first part of November. Well, this is your seasonals. The red is your 5-year. Then the other colors are your averages of 10, 15, 20, 30 year. But I want you to show the black is our current year. All right? Here's black. Okay, red has already bottomed now. The last one to bottom would be the 30-year, and that bottoms, if they still want to slip lower the rest of this week, could bottom late this week, the start of next week. And then I always say the last week of September into October, there's a good run. And typically it's the first part of November. So you can see on the 5-year, that carries us into the first part of November. If you look at the other years, the 10, 15, 30s all combined, well, they're more about end of October. The point is, somehow, some way, there should be a 30-day lift coming here in the wheat market, and maybe these Ukrainian stories are the last of the bearish news they can pump at this thing. And whether France gets some Chinese wheat sold, Algeria is going to pick up from Russia is where I think they're coming from. But that has not been announced. So anyway, as we look at the wheat, here's our 60-day cycle. Low came a little late, and we've done this before. Your 60 days, take a look how they usually come into play. But some days, like this low, came in a little late. I think somehow, some way, we've got a XYZ trade playing out here. It's a WXYZ, and then a new bear market move lower after that rally. And this rally lines up at least into the fall. And we'll see. In the next 6-day cycle is the opening of November. Intraday charts, we got excited last week on this intraday KC wheat. Did turn positive, and unlike prior attempts, seemed to be holding up well until, of course, we got to Sunday night, Monday. They dropped it lower. Today, we played with it during the intraday turnaround Tuesday rally, but we still slumped late in the session. We need to see this lift get going tomorrow because on wheat, this is Chicago. We can still rule this as a spike bottom. I always said spike bottoms, spike bottoms. We don't create basing bottoms, spike bottoms. If we just take off tomorrow and don't do a double bottom in here or a triple bottom, which, is less bullish, we should get something rolling in here. So we'll see. Corn, well, they tried to shove it through that 5-week low. Friday on the close, they got it there last night, but by morning hours, we turned up intraday. We need to get moving here too. We got to start taking out 583 to the upside to get excited. Otherwise, this is just a quagmire. Nothing to talk about here. Farmers will only sell pre-delivered corn, store the rest. Buyers don't want to step in and pre-buy. So fine, leave it hang, I guess, so we can pick up a big insurance check in October then if that's how they want to do it. On the weather into South America, let's go out 10 days, Friday, September 29th. There you go, bean country. There's no rain showing up. So now we're looking at them having to start planting the extreme dust come October 1st because they've got to get rolling so they get that crop in by at least the 3rd week of October so it doesn't blow up the corn timing for planting in February. November beans. We are broke through the 200-day moving average, and the overnight support came at the 100-day moving average, just shy of it, and the 786 retracement. We've been talking about wave 1. I originally believed that the USDA was going to find the losses early. I didn't think wave 2 was going to get very deep, much more than here, and then turn back up. I'm wrong. They took the seasonals and pounded it, and you've got people out there believing the bean yield is probably even 51 bushel. It's just going to take time to prove what is a reality of a very short crop that was hurt in the filling stage of mid-August to the early part of September. So this clean uptrend didn't take place. What we do is have standard wave 1 of 5 waves up, doing a wave 2 pullback, 786 pullback. Of course, that twos can be nasty. We can be slippage all the way down to something below 13 and then still turn higher in time for an October 12th crop report. Let's just hope we have a government operating at the U.S. with a budget so that the USDA can release. Crude oil, I wanted to show you this again. We talked about last week. Probably had another week of upward action with our turn date, this 22nd. That's Thursday. I talked about how major resistance was just 93.5 to 94. We could attempt that before a sell-off, and I'm not talking a big sell-off, but we could get an ABC setback. Who knows? Federal Reserve could stimulate this tomorrow. In regards to the crude oil continuation chart, this line, even though it denotes last fall's highs, it's also a 50% retracement from this high to this low. So we'll see. I think we're days away from a high, if not already, and $1 or $2 away from a high, if not already. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.